Welcome back, you beautiful people, to the Real Collective Podcast. I am your host, Sean Tasse, joined by my illustrious host, friend, and pal of the show, as always, Kyle Miller from Mortgage Brokers Ottawa. Kyle is one of the premier mortgage brokers in the city of Ottawa, and
Whew.
it's true.
Thank you.
Hey, you got that rep. You got that rep, man. That's a nice rep. You can always hit that like button, subscribe to the channel, share this with someone who you think might like this conversation. You can also download the buyer or seller guides below, and you can also schedule appointments with us in the Calendly links. Shout out to our sponsor for this week's show, PB Law. A little bit more about them later. Some local lawyers in Ottawa who do great work. They've actually been guests on our show in the past. So we'll talk a little bit more about them later. But Kyle wants to get political. Kyle wants to talk about something that's going to be divisive. Just what we all want. Let's stir up some shit this holiday season. There are politicians who are talking out of both sides of their mouth. Can you believe it?
Oh man, the thing is, it's not even politicians. This one came to me. When I was through TikTok, and it's a guy commenting on. I don't know who he is. I haven't even looked him up. It's here on my phone, but I haven't looked him up to know like what he is. I think he's a regular dude, right?
Okay.
He obviously, I think, is a renter, and I'm not dogging renters, but he's talking in front of an article that says Ontario eyes giving credit bureaus access to landlord tenant board orders for renters with history of arrears. So essentially saying
Good.
they want to give power to landlords to have access to report to the credit bureaus that you as a renter have been behind on your rent. So treating it like a credit thing.
Yeah.
And his opinion goes on to say, I have not read the article fully, but his opinion goes on to say, like, he goes, it's just a way for them to control you. It's a way for them to charge you higher interest rates. And it just gives them way too much leverage and control over you. And he's like, so that's bullshit. And I'm like, okay, I can see that. I get where he's coming from that side of things, because there's going to be asshole landlords and there's going to be asshole tenants at the end of the day. I think that's a fair assessment. But the other part is just, I don't know how many months ago.
Hang on, before we get into the other part, let's dig into this a little bit more. There is now obviously we work with more so landlords than with tenants in our practice. And for sure, there are absolutely some great tenants who are wonderful people who take great care of the houses that they're living in and all that sort of stuff. And in those cases, I don't think any of those people would care about what we're talking about, right? I think the only people who are going to get upset about this are people who have delinquencies or people who are working the system. They talk about them as professional
Tenants,
right? Professional tenants. And that's what they do. They know how the system is absolutely beneficial towards the tenants, whereby, hey, look, you can just jump from place to place, and there is no central repository of information about shitty tenants who don't pay. So, there needs to be some sort of, unfortunately, because people have broken the system, and they're not just like you said before, hey, I'll tell you what I think, and that's the truth, right? That's it. Now, people are abusing it. They're like, oh, hey, I don't have to pay. This all happened during COVID. I don't have to pay because they can't kick me out. I'm protected. I'm protected by the system, and so they're using the system. And so landlords are like, how do we overcome this? How do we deal with this? And some people will go to the extreme where they're like, I'm going to have someone come and knock on your door who's big and say, it's time for you to leave, right? And there are landlords who do that. I'm not advising it. I'm not saying it's the right thing to do. It happened a lot in the 80s, and I feel like it's happening a lot more now when there is no regulation on tenants. And so maybe this mitigates that, which would be great. But my thought is, yeah, if landlords do credit checks of tenants before they put them in, then if a tenant doesn't pay their rent, it should have a negative impact on their credit bureau.
I don't know that I disagree, right? Like it's a two-way street. I get why there's a pile of tenants who are pissed and who aren't treated well, and rent eviction is a thing, and landlords are trying to, not, I don't want to say scam, but trying to, you know, maneuver the system to their benefit as well by charging higher rents and stuff because their payments have gone up. Like there's a balance to be struck, and I don't know where it is. I've never, other than living in a hostel, I've never rented in my life. So I'm not a good advocate for either side of this, quite honestly. What I found super interesting was this comes out, and this dude this dude's ripping on it about all the control and all the things that this is going to give landlords and how bad it's going to be. Again, I think for a very small section of the renting population, this will be super detrimental. One, because you got the abusers who are going to be like, shit, how do we now abuse? But there are also going to be, unfortunately, some people who are just in a tough spot. And then if they end up with the shitty landlord who's like, oh, you're 30 seconds late, credit report hit, right? That's extreme. But, you know, that's going to hurt us, again, a small section of people who just need a little bit of a break. Like I understand that. But the flip side was just a few months ago, it was hailed as the best thing since, 30-year AMs on a mortgage, was the fact that now renters who were asking for this are now allowed, or it's now going to be that their good payment credit history is going to be used as credit building. So you don't have to go get a credit card. You don't have to go get a car loan or a line of credit and put yourself in that position. Just showing that you pay good rent on time will build credit. Well, yeah, then this is the flip side, because who's reporting that? The landlords are reporting that.
Yeah.
You can't have it both ways, dude. You can't get mad at this and then at the same time say, well, my rent needs to go towards my credit bureau. Well, who's reporting it? Well, the landlord. Okay, so they can only report good. They can't report bad. Is that what we're asking?
Yeah.
Like, so that was the thing. I'm like, dude, this is crazy. You can't be bitching about, you either want it or you don't, and you take the good with the bad, right? Like,
all right. So when you brought this up, I thought that was a political thing. I thought you said this was something political, but it's not. It's and here's the thing. It's the people who want it are the people who pay their rent on time and are the good tenants, like I was telling you about. And the people who don't want it are the people who don't pay their rent on time. I don't think that the system is going to be abused. Again, a lot of the people that we work with, landlords that we work with, are like not huge conglomerates in terms of like big rental corporations. They're like people who own three or four, and it's regular people. And I think if the tenant just says, hey, look, I'm short this month, I'm $200 behind, I'll catch you up at next paycheck, I'm paying you $2,200 a month, I've only got $2,000, it's the first of December, and I'm trying to get Christmas presents for my kids. Can you wait an extra, 10 days to get the extra $200? I don't think that landlord is reporting these people. It's the professional people, like the horror stories we've heard, man, about people trashing places, not paying rent, all of that sort of stuff. I think that's what the target would be if I'm the landlord, right? I don't want to kill a single mom who's scraping by to try and make Christmas for her kids, and is short a little bit and is open and having communication and saying, hey, here's what's going on. Can we work around this? Yeah, I'm not going to hit your credit bureau. Just make it worse for you? No, thank you. I'm not doing that. Right. And I think most people will be the same. Like most landlords, if it's up to the landlord, most landlords are going to be the same way. And
what?
So
It's just the thought of like, because I think it is the right move to have. It is the right move to have people's rent go towards building their credit report, because it isn't much different. It isn't different than paying a mortgage, and you're paying a ton. And the joke of, so you're telling me I can't afford a $1,500 a month mortgage payment, but I can afford to pay $2,000 rent. Those numbers don't work anymore in that joke. But it's like, okay, yeah, that's fair, and I believe that. And the thing is, we already kind of do it. when you're, if you're new to Canada and you haven't been here long enough to build our standard credit that you need of 2-year history and all this kind of stuff, they will accept proof of rent payments and utility payments as a way to prove your payment history, right? So it's the next logical step. I was just boggled my mind that this guy was coming out and trashing this, but I haven't seen that he was cool with the other way either. But and I'm not mad at this guy. I'm just like, this tipped me off to be like, how are you doing this? You can't have one without the other.
I have an answer for you, because everybody
Okay.
gets a voice on social media. Everyone's voice gets to be heard equal. And if it's in your algorithm, it's likely going to pop up. And if it's in your algorithm, someone else's, and more people see it, it's just going to recycle. Is it taking a holistic approach, your favorite word, looking at everything? No, it's absolutely not. It's taking one person's one-sided opinion about how this is whatever. And then because it creates this divisiveness of, oh, well, I'm the landlord and I think that you should all blah, blah, blah. And, oh, I'm the tenant and you guys are all screwing me over. And even within those groups, you've got landlords who are like, I don't care, fuck them all. And then and then you've got like, hey, I just want to help out regular people and I want to create more housing. You've got two different types of landlords. You have two different types of tenants. You got the tenants who are like, yeah, this is great, I pay my rent on time, perfect, this will really help me with, I'm a young professional, it's going to help me growing. And then you've got the tenants who are like, I never pay rent, I jump from place to place. Every time that someone asks for a reference from my previous landlord, like, yeah, this person's great, take them off my hands, out of my place, because they've been trashing it and never paying rent. Thanks, right? So there's divisiveness. There's two types of people. We've got an agent on our team who's been focusing a lot on helping new. Like helping tenants, not just new to Canada, but helping tenants. And what's really been working is a lot of times the landlord will ask for first and last month's rent. That's not a lot of times, that's always what it is. You have to pay your first month and your last month up front. What they're doing is they're paying their first month as well as the last 5 months. So they're prepaying the back end of their lease to make them look, hey, you know what? We might be new to Canada, we might not have the greatest credit history, whatever. But here's the first month's rent. We're going to come up with the second month's rent, but we're also giving you the last 5 months of rent up front instead of the last month's rent. We're not worried about giving you the first couple months here, and then as we get to a 6 month term, oh, we didn't find a job, we don't have any money. No, we're good for the end, and we'll come up with the money at the beginning. So I think that's been a really neat strategy that we've used. And yeah, man, it's a different world out there. People just want to be divisive and say their one-sided argument, and that's what it is.
Yeah, I just found it wild. I just found it wild because I'm like, this, you can't you can't have one without the other. So unfortunately, that's what it seems like this guy's saying is like, this is a terrible idea. Okay, fine. Then you're also trashing the idea that using your rent as a credit building opportunity is also a bad idea.
I
Because again, who's reporting? It's the
Right.
same person is going to report.
Yeah, I'd say if I just defined for you four different types, like two different types of landlords and two different types of tenants, I'd say for one of those four groups, it's a terrible idea. For everybody else, it's perfectly fine,
Yeah,
right?
yeah.
And the delinquent tenants that it's a terrible idea for. That's
and
it.
it's always gonna and it's like we've always said, right? I mean, I look at it, see it in the mortgage rules itself. Every rule that's put out by for approving a mortgage was because somebody screwed the bank.
That's right.
That's why it's there, right? You got to prove your down payment. Why? Because someone laundered money. We need a gift letter. Why? Because someone got the gift from the neighbor and then that got all messed up. So no, now it's only from family,
Yeah.
right? And it's just like it's money's got to sit for 90 days. Why? Because they need to know that it's international money and it's not funding terrorism. Why? Because somebody did that, right?
Yeah.
Like it's all the same stuff. So we're all our rules for one are written for 1% of our population.
I mean, listen, you can make the argument that the British common law system comes from, hey, all of our rules are written because someone did something like, no, that doesn't sit well. So let's write this rule. Let's write this law, right? Like that's what it
Yeah.
is. Someone tries, oh, hey, I figured out a way to screw the system. The system's like, yeah, you did. You know what? You're absolutely right. Okay, you can't do that anymore. So
Yeah. I guess that was okay. Well, we're done for today. We solved most of the world's problems. You guys have a great one. And we're out.
well, you know what? We won't be out because
Said the quiet part loud.
yeah, that's right. We've got some pretty cool stuff to talk about in the second half in terms of some mortgage rate changes and refinance potential. But before we do, we want to take a quick second to give a shout out to our sponsors, PB Law, Puneet Bardwar, and Bonnie Jordar. I'm sure I'm busting their names. You can check their website. They have closed a number of transactions for us, and more importantly, they're real estate lawyers who are real good people. They have a down-to-earth attitude. They have a really good understanding of what's going on in the legal world, and anytime that there's something that you need to do that's a little bit different, they have the forward thinking ability to be able to, okay, stick handle what the problem is, to see what the potential problem is, and to come around and do something about it. You can check out their website, puneetbarbar.com. That's PUNEETBA. Ooh, I'm going to butcher this. BADHWAR.com. Puneetbarbar.com.
Tell
PB.
me we're writing that down at the bottom here.
Yeah,
Please.
it'll be there. PB Law. They're delicious. It goes great with jam, and lovely people. And you know what? They really know what they're doing, and they go that extra mile for their clients. So shout out to PB Law Corporation for their sponsorship of the podcast today.
What can I add something to that? It's a very overlooked part, in my opinion, of the real estate transaction is the lawyers. Like people are like, well, how is that? Like lawyers obviously are needed. They are, but having a good lawyer, having a good relationship with the lawyer, having good communication with the legal team, and I mean that both ways. Like, I've worked with lawyers who it's closing day, and all of a sudden now there's a problem that they just found out, right? They haven't we've sent documents, but they haven't reached out to me to be like, we got them, or hey, we saw this that's different than this, what's going on, right? All these things that can be fixed. Stuff happens, people on the different ends. I was working with one the other day where the numbers were just so wrong, and fighting back and forth, and just I wasn't in the loop until my client reached out and was like, this is all messed up, what's going on? I'm like, two emails and a phone call, and now everything's fine, just because we were looped in, just because we had communication going. So to have lawyers in your corner like that makes everything better. So be wary, like take the referral, talk to the people, make sure you connect with them, you like them, you trust them, you're going to be okay. But you want to have that open communication. The lawyers they can kill it or they can make it great. It's really important.
No, it's we work with a number of great lawyers, and they're definitely some of them. So check them out. If you need, you can check them out on our website. You can also go to their website, PB Law, PB Legal, PUNEetBarbar.com, or also I think it's a PB Legal Corporation. Anyways, I'm sure they'll put it all below in the write up. So shout out to Bonnie and Puneet, some really good friends. All right, so shifting gears a little bit, getting back into the second half, as always, like, subscribe, share, download the buyer seller guides. You can also listen on Apple Podcasts, Spotify, or any of that good stuff. And we wanted to just round the day out talking about something that was brought up in our office. Gets together once a week and we talk about different strategies. Are you all right there, Kyle? Don't, yeah, you just don't die, man. Our office gets together once a week. We talk about different strategies, whether they're legal strategies, whether they're financial strategies, whether they're talking about what's happening with the rates. And the neat overarching picture is that, a year ago, interest rates were at least 1%, if not higher, right? 1% higher, if not even more higher. And so there are some neat opportunities and potential strategies that might work for you if you bought your property a year ago. a year ago, you might have paid a little bit less for your house. You might have put 20% down. You might have, let's say, for example, paid an interest rate of 5.5, right? And now you might be able to get an interest rate of 4. You don't have to wait until the end of your term to at least look at the impacts of refinancing your property. So, is there a chance that your property, that you bought for $800,000 as your move up property, and you bought it with a 5.5% rate, and now you can get a rate of 4, and you've paid down, you put 20% down, so you put your mortgage was for 600 grand. Now your property gets reappraised at 825, and you actually only owe, $590,000 on your property. Maybe the rate drop means that you can do something different. You can have a look at that, right? And Kyle, you can run those numbers for anybody, whatever they're at, right? Whatever group they're working with, whatever bank they're at, or whoever holds their mortgage. You can look at that mortgage statement and figure out, yeah, this is going to work for you, or no, it's not, right?
Yeah, this is going to be massive going forward because of where rates have gone down to and are coming back up to. But that's the kind of math we do, is to see if it makes sense to break that mortgage and save the money. I remember during COVID, I had a client that I was working with. We put him in with one lender. He's about 2 years into his mortgage. And when the rates dropped to like sub 2%, he was like, man, can we save some money if we do this?
Yeah.
And we started doing the math. The big thing that people have to understand is there's a very good chance, I will never say always, but there's a most likely you're having to pay a penalty to do this.
Right.
Especially if you're on, I'm dying here.
Don't die, Kyle. We need you to talk. All of our jobs. I mean, yes, sir, it's a podcast, but all of our jobs are pretty much. I don't know about you. So much time on the phone talking to people, right? I got a guy who calls me all the time. He's like, and twice yesterday I answered when he called. Normally I have an auto message says, I'm on the other line, I'll call you back, or I'm with a client in an appointment, I'll call you back, or whatever. And so normally I'm always sending him whatever. And then yesterday he gets 2 answers from me in one day. He's like, whoa, how lucky am I? So I don't know about you, but I am always on the phone, whether it's like you said before, whether it's with a lawyer, with a client, with a lender, with whoever, with the other agent, trying to make something happen, right? So much of our time is spent on the phone. So making sure that your voice works, very important. So please don't die and don't lose your voice.
I'm back. Here we go. Woo, that was fun. What was I saying? What was I saying?
We were saying don't die, but before that, we were talking about the fact that you might have a penalty if you're talking.
Yeah, that was it. So anyway, and we had so we dropped his rate had dropped significantly, 2 or 3%. So there was definitely going to be savings in terms of payment. And when we looked at it, he had to pay a $35,000 penalty to get out of that deal. But when we ran the numbers, and this is where the mentality has to be, this has to be right for the right person. Right. I looked at it and I'm like, 35 grand. Like, we've just bought a car.
Right.
Yeah. But his thought was, hey, look, if we keep going, I'm going to pay X amount of dollars in interest and my payment stays here. And this is how we were working it out. If you refi, and there was room to do this, bury that penalty. Yes, your mortgage goes up, but the overall interest goes down by more than the penalty, and your payment decreases by X. And over that same 5-year period, you're going to save this much money on payment.
Right.
So does it make sense to do? Right. And that really comes down to it. People have to decide where they want to spend money. And what I say today is what pisses you off the most. Is it spending more on interest long term, or is it spending more today? Or what's more important? Is having better cash flow today make sense? And do you care about the interest? Because you're not getting all of it. You have to compromise somewhere. So there are opportunities out there for some people that are going to be able to do that and potentially save some money. But there's some nuanced stuff in there too that has to be taken into consideration.
Well, it sounds like that scenario that you're explaining. Yeah, okay, there's a cost of doing it, but overall, you're winning on two other fronts. I mean, if there wasn't a cost to do it, it would be a slam dunk. But the cost, like you said, the cost is absorbed in the savings. So yeah, okay, for sure there's a cost to do it, but the savings supersede the cost. So it's like, who cares? So many times we get talking to clients and like, oh well, we don't want to pay you the rate that you're charging. We want to pay you less, right? Like that's the thing as listing agents we bump up against very often when we're talking with sellers is, well, you know what, you're charging X, we want to pay you X minus, 0.5 or minus a 1 percentage point or whatever it might be, right? And in those cases, it's like the focus is on the wrong thing. The focus is on the amount that they're paying, and the focus should be on the amount that they're netting, right? How much money are you putting in your pocket? Yes, you know what? We do charge more than, and I've said this before, we charge more than some other agents. There are agents who charge less than us. However, we constantly and consistently outproduce them, i.e., our clients put more money in their pocket, even though they pay a little bit more. So if we charge a percent higher than the average agent, we're constantly selling houses for 5, 6, 7% higher than the average agent. And yeah, I can pull the math and show it to you. So it's like, you never know until it's over, right? You only ever know what rate you're going to pay going in, but you don't ever know what price you're going to sell for, or you don't ever know how good you're going to do. So people get so stuck on the rate that they're paying when in reality they should be focusing on what they're netting. And it's the same thing, right? You get so stuck in this one thing where you're like, oh, I want to fight you about this. It's like, what, I think I used this term before. You're tripping over a nickel to save tripping over a dime to save a nickel, right? So it's like,
Yeah, tripping over a dollar to save a dime.
yeah, right, exactly. Just pick up the dollar and stop, right?
Yeah.
And the time and energy and all that sort of jazz that you're losing in the meantime. So it's
Well, because the other thing too is that we're looking at it. We end up looking at it from a very narrow perspective of like, today this is the cheapest thing, or
right,
like the lower rate should be the cheapest thing,
right,
and it's going to save me this much money. And the one thing is that's a feeling. That's not exact, right?
right.
You have to do the math to look at, like you said, to look at the net, because that's the end game, right?
Yeah,
And do the same thing on the mortgage. People will look at it and say, hey, I want that really low rate product. Okay. It's going to save me $75 a month. Totally understand that. I've got this deal right here that's this much higher. Well, that, Kyle, why would I pay more? Because the penalty on this one is absolutely excruciating. If you guys don't make it through that maturity, and it doesn't matter why. It doesn't matter why. Just if you don't, right, you will absolutely get wrecked on a penalty. And the savings from that, what you would have by taking this deal, which is a standard penalty, blah blah blah, right, is way better. So, and the thing is, we're not going to know if it was the right choice, and this is the problem.
yes,
Not going to know if it was the right choice for
until
another 3 to 5 years till you're done,
that's right,
right? So we might look back on this and say, well, shit, we should have done this,
right.
right? But if we live in the world of shouldas, I should have been taller, and I should have been like an NHL player. I don't know, right? There's lots of things I should have done,
More
but
hands,
whatever.
more hands.
Thanks, Dad. But it's just it's just but it's just it. But like that's the thing. So it's trying to prepare for as many pitfalls as possible, keeping them enough flexibility open. And if you're only focused on that one thing, I just truly think it's still a crapshoot. You might be right. It might work. And then you get to say, hey, but what if it doesn't? What's the next plan?
Well, here's the thing. There's so many things that can happen, especially if you're going for a 5-year fix. There's so many things that can happen, so many life-changing events that can happen in 5 years. Those are all whatever. You have to move for work. You get, you buy it with a partner and you're no longer partners and you can't afford the house. You find that the rate is lower and you want to refinance because exactly what we were talking about a minute ago. There's so many reasons to be nimble in terms of the decisions that you're making, because who knows, life changes, right? Not everybody is in their house for that 5-year term. Some people have to go sooner. Some people want, hey, I want to upgrade. Well, shit, you know what? To upgrade, it's going to cost me $35,000 of penalty. Get out of it because I went for the lower rate as opposed to the more flexible option, right? In terms of penalty at the end of it. So yeah, absolutely. I would personally, I would forego the difference in payment, because I bet you the difference between the two is going to be 20, 30, 40 bucks a month, to have the peace of mind that down the road I'm nimble. I can do what I need to do. I can change what I need to change, because there's so many different things in the world that change around me. And if I don't have that ability, I'm stuck. I don't like being stuck. Right. So
Yeah, and that depend and that's a conversation that needs to be had. I think if your broker's not having that conversation with you about just, hey, look, fixed is fine, but here's what happens in this market that we're in, right? Hey, look, variable is a great choice, adjustable is a great choice, but remember, it can still go up, right? To as a broker to bury to like slam your fist down and be like, this is the only thing you should do. I'm like, that's just it's too arrogant for me. I'm like, look, I know what I know, and I can see what I can see. I can't control it. So here's the options. I don't want you to overanalyze, but here's my opinion on how this plays out.
yeah,
Right. And I say to my clients all the time, I'm like, I care, but I don't care. Like, I care what you do, and that we get this done for you the way you want it. I don't care what you pick.
right.
But if we've laid out the pitfalls and we know what could and maybe, right, it's the best we can do. So you take your pick on where we're hedging bets,
Yeah.
and this is my opinion on that. Let's go.
Yeah.
Right. Like,
Yeah. I think that's the best way to advise clients. Well, I think that that about does it for us today. I think it's a good place to wrap up. Again, thank you very much to PB Law, Puneet and Bonnie. Great people, lovely people, and appreciate you guys sponsoring the podcast. As always, hit that like button, subscribe to the channel, share this with someone you think might like this conversation. You can also download us on Apple Podcasts, Spotify, or watch us on YouTube. You can download the buyer or seller guides below, or you can get down below and schedule an appointment with Kyla or I with our Calendly links below and have a personalized conversation, especially going into the holidays and thinking about lining things up for the new year. A lot of the conversations we're having with clients right now are lining up for a new year. How do we make sure that we are being successful in 2025 in real estate? Until next time, keep it real.
collective.